Interest rate hikes explained in layman's terms. I'm going to explain to you the recent interest rate hikes, future ones, the theory behind it. I'm going to give you some of my thoughts, Elon Musk's thoughts, as well as the Federal Reserve's thoughts. I'm going to break it down and show you exactly how this affects your personal finance, especially in the upcoming year and the rest of this year. First off, it's important to note that the interest rate hikes are meant to decrease inflation. This can bring some pain to certain households, more so those with lower income as well as higher debt. It's important to note that the Federal Reserve will cut and increase the interest rates overall as it pertains to the current economic climate. The goal of cutting interest rates is to reduce the cost of borrowing money so that companies and people are more apt to invest and spend on the economy. You would do this when the economy slows down so that it can help stimulate that economic growth and spark it back to life. But vice versa, when the economy is hot, these interest rates get hiked sky high. So what happens when these interest rates are hiked? That is when your debt becomes even more expensive. This is because consumer rates on debt, more specifically like credit card debt, tend to move side by side and coinciding with the federal rates as well. Equity and stocks drop in value, but the price of the dollar shoots up. Now, in certain countries, it's been noted that this may impact their economy in a negative way, being as their currency might not be as strong as the US dollar. So what happens when these interest rates rise too high? Well, I will tell you that it is a delicate balance between teetering between two different things, such as the interest rates and inflation. If you jack these interest rates up too aggressively, too fast, too high, then it can tip you into a recession. However, if you allow the inflation to get too high as well, it can do the same thing. So it's more or less a balancing act of trying to find that middle ground to bring interest rates low, but inflation rates not going too high. I say this because higher interest rates make debt costlier and borrowing money even more difficult for both consumers of business or individual status. So who is worse off when these interest rates rise? Well, this is when that saving comes into play. Hopefully you have saved money, because who is affected more in a negative manner is those who have to borrow money, because like I said, the borrowing costs more because those interest rates on borrowing money go up as well. Now, if you saved money, the interest rates for those funds also go up, so those people might actually be at an advantage. Another important thing to note is the housing market with all of this and how that affects your personal finance and as well as your road to financial freedom when these interest rates get hiked up. So how does this affect your housing? Well, going back to what I just said, those who have to take out a loan or mortgage will be negatively impacted because these interest rates are shooting up. But these rising interest rates going up would affect these monthly mortgage payments, also shooting those up. These rising interest rates would negatively impact these home buyers with these loans and borrowing money, because it would make the price of those monthly mortgage payments go up as well. Now, there could be less buyer competition as for there being less demand. So that could bring some prices down, as well as if you have the money to buy a house outright, I don't see it negatively impacting you that much. So first off, I'm going to give you Elon Musk's thoughts on these interest rate hikes. Musk notes that a severe recession is impending and can take place if the Federal Reserve doesn't act fast in adjusting their approach to handling the inflation and interest rate issue. He notes that the direction of the current economy is very concerning and that the Federal Reserve is amplifying the probability of a severe recession taking place. He further notes that if these interest rates don't get cut immediately, that the impending recession could go through withstanding through the year 2024. Now, with that being said, I'm going to tell you what the Federal Reserve Chair Powell has to say about the issue. Federal Reserve Chairman Jerome Powell is very committed and dedicated to bringing the national inflation rate down to 2%, which is where it has sustainably been around, floating between 0.5 and 2.5% for just over 3 decades. And he's even adamant about sticking to this plan after being informed that constantly increasing these interest rates can lead to a higher unemployment status in America. Note that the current interest rate percentage in America is around 7.7%, so that is a big decrease that has to take place. Powell does deem the fight against inflation as, quote, inadequate. However, even with that being said, he is pursuing further in the year, for instance, with more interest rate hikes just on a smaller scale. So now that we have Musk's thoughts as well as Jerome Powell's thoughts, I'm going to tell you a little bit about my thoughts. I think it's a bit of a double-edged sword. Obviously, interest rates and inflation percentage is a delicate balancing act, as I said, that no matter which way you tip the scales, it's going to negatively impact some grouping of people negatively, at least short term. Now, looking long term, my unpopular opinion would be that the interest rate hikes could eventually lead to more stable prices across the United States, as long as the approach isn't too aggressive and too quick. Now, it's easy to say you don't agree with the current interest rate hikes going on, but it's more difficult to answer why you don't agree with it. And it's most difficult to answer with a possible solution that is better favored towards appeasing all sides while balancing the inflation and the interest rates. Now, in regards to your own personal finance and your own journey, whether you have a lot of debt, whether you have a lot of savings, or neither here nor there in between the matters, if you agree with Powell, Musk, or myself, please let me know in the comments. I'm really interested to hear your thoughts on it. I'm very interested and I'm open to different perspectives because I might be missing something. Now, with all this being said, in my next video, I'm going to be covering the probable 2023 recession and what we could best do to prepare our personal finances, or some strategies and some tips to handle it. So make sure you subscribe. And with that being said, if you haven't watched one of my last videos on the best possible ways to make money online in 2023, make sure you do so.